ABBVIE Stock, ticker symbol ABBV. This stock is down 4% on the year-to-date chart, and after earnings were released, the stock went up roughly 8% in the following days. ABBV beat on EPS by a small margin, but missed on revenue. For the next earnings, all 6 analysts expect a miss because of several reasons, and one of them being a weaker outlook. People love ABBV because of the dividends, and with reason. Right now, dividend yield is at 3.79% and is also growing at a high pace of almost 17%. But does this mean that ABBV stock is a buy at current prices? Well, in this video I'm going to show you real quickly what ABBV does. The most recent earnings report, the fundamental analysis, dividends, returns versus the S&P 500, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does ABBV do? ABBV is best known for manufacturing Humira, a medication to use to treat arthritis and Crohn's disease. Next to that, they have several other drugs within their portfolio. If we check the results, we see that revenue went up 1.6%, but more interesting is the operating earnings, which went up roughly 10%, meaning margins are increasing, which surprised me quite a bit. Diluted earnings went down quite a lot year over year, but on the 12-month period it's still looking quite good. Adjusted earnings per share went up roughly 15 to 20% and are also up quite a bit on the 12-month period. For 2023, ABBV expects to deliver an EPS of $10.7 to $11.1 a share, which is kinda disappointing since the 2022 EPS was at $13.77, so that's a major decline that they expect there. As most people know, Humira is the top drug. So if we check the revenue breakdown, we see that total revenue was at $12 billion in the US and $2.9 billion international. Total of $15.1 billion. Immunology represents around 50% of the total revenue, but in the US it represents around 60%. There was a major decrease of 26.5% in Humira revenue in Europe. This is also because of the patent that they have on Humira drugs. Competitors are allowed to sell the drug as well, so that's definitely something to keep your eye on. The thing that I really like here is the fact that Skyrizi and Rinvoq are both still increasing at high numbers, both in the US, around 50 to 85%, but also international, at 30 to 50%. So this comforts me a lot. In total, immunology segment went up 17.5%, which looks pretty good. Two other major segments are oncology and neuroscience. Oncology is down almost 13% year over year and neuroscience is up 3.4% year over year. Both are really lagging in growth, so that's something to keep your eye on. The last segment that I want to discuss is eye care, which decreased around 15% in revenue in the US. Also a segment that is lacking in growth and does worry me a bit. On the full year results, we see that net revenue is increasing at 3%, reported, and 5% operational. ABBV has some specific problems as I just highlighted, but with the high growth in Skyrizi and Rinvoq revenue, I'm not that worried about the future. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to join my Discord channel for free to meet other people within the community and to talk about stock. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. ABBV is a 276 billion market cap company, which makes them one of the largest drugs company in the US and also one of the bigger companies in the US as general. PE ratio is at 23, which could indicate that they are slightly overvalued right now. Later in this video I will show you my 3 price targets for ABBV, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 58 billion and in this graph we see that revenue went up in the long run. During the lockdown periods revenue skyrocketed, and right now revenue is slowing down a bit, so that's something to keep in mind. Margins are going up and down quite a bit, so it's not really steady and consistent. Since 2021 it's going up again, but most recently it started to decrease a tiny bit. EPS is also going up in the long run, but it's not really steady and consistent. Nevertheless, it comforts me a lot. Price to sales ratio is at roughly 4.8 right now. Over a longer period of time, it's increasing quite a bit. The current number does concern me a bit as well, and I would like to see a lower number here. Price to free cash flow is around 13 right now, which could indicate that they are undervalued based on this number, so this looks really good to me. Analysts expect EPS to increase at mid-single digits to high single digits in the years after 2025. But in the coming 2 years it's expected to have lower numbers. That's something that they also stated themselves in the earnings report. Revenue is expected to grow at mid-single digits in the coming years, which is also interesting. In the coming 2 years it's expected to see some trouble which could be related to Humira losing his patent in Europe. Return on assets is sitting at 12%, which is above my 10% minimum, so this looks pretty good. Return on equity looks also really good. The most important number, return on invested capital, is sitting at 16%, which is a really good number. They really know how to invest their money. However, it's lower than the 5-year average, so that's something to keep in mind. Current ratio is at 0.93, which is very nice, since it's below the 1.5 mark that I prefer, so this looks also quite good. Total debt is sitting at 64 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now total cash is sitting at 9.2 billion, so they can't pay down a big chunk of their total debt, which is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. In here we see that free cash flow is going up in the long run. To me this is one of the reasons why I love ABBVIE. The free cash flow is growing at high numbers. But the thing that I don't like are the shares outstanding. It's going up quite a bit since 2020. To me this is very important. It means when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyway, dividend yield is sitting at 3.8%, which is really good. Annual payout is at $5.92 and payout ratio is at only 41%. I prefer 50% or lower, so right now they have roughly 59% left in cash to buy back shares, pay down debt, research and development and all other things. The 5-year growth rate is at 17%, which is really good. And they grew the dividends for 9 years in a row, which is very impressive. Overall a great looking dividend scorecard, but how about the historical returns? I decided to compare ABBVIE stock with the overall market, in this case the S&P 500. Next to that I added Amgen and Gilead. On the 5-year chart we see that ABBVIE had a 70% return including dividends versus the S&P 500 returning 62%. ABBVIE beats the S&P 500 but also the 2 other drug companies by quite a margin. On the 1-year chart it looks pretty different. ABBVIE still has one of the highest return while the S&P 500 had a minus 5% return. Gilead had the highest return with 37%. And it's pretty much the same story on the 6-month chart. ABBVIE returned almost 17%, again one of the higher numbers here, while the S&P 500 returned only 4%. On the 1-month chart we see that ABBVIE again had the highest returns versus the others. So bottom line, ABBVIE did beat the S&P 500 in the long run, and also some competitors. To me this looks pretty interesting. But is ABBVIE still a buy at current numbers? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 4%, 5.5% and 7%, since I think they will increase their revenue at lower numbers versus the historical averages. Next to that it is also based on the analysis expectations and the current outlook. Profit margin I'm filling in 90%, 20% and 21%. And for the free cash flow margin I'm filling in 35, 37 and 39%. For the PE ratio I'm filling in 18, 19 and 20. And for the price to free cash flow I'm filling in 15, 16 and 17. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now ABBVIE is at $155. I hit analyze and we see a few green numbers. We have a low price target of $92 to $153, which is quite a big drop. We have a mid price target of $111 to $187, which is still a big drop. And we have a high price target of $135 to $228. To me, the mid price target is the most justified here, since I expect the company will face down some slowdown in revenue versus the historical averages, but not as much as we are seeing right now. Based on the numbers 111 to 187, you could argue if ABBVIE is undervalued whether or not. They are somewhat in the middle of this price target. My final conclusion is that I really like the company. They have a top drug with Humira that faced some slowdown in revenue in Europe, but 2 other drugs are growing at insane numbers. Companies like ABBVIE can always be a bit risky when it comes to losing patents or medicines that have problems. However, the dividends are insane. It's growing at a high pace and looks really healthy. The valuation is something you can argue about. Based on the earnings value, it doesn't look really good, but based on the discount and cash flow value, it does look pretty interesting. For now, I'm waiting for the upcoming results to see if they are able to sustain the growth with Ringvac and Skyrizi. Next to that, I'm really interested to see the other segments as well. Whenever the price drops a little bit, I think this could be a great buying opportunity. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.